Hi everyone, my name is Tim and I'm a member of an investment club called Your Liquid Assets. Welcome to our video today. Now before I begin, I want to make it clear that I am not a financial advisor. So please don't take any of the information that I share with you in this video as financial advice. You have to consult with a professional or do your own research before making any investment decisions. With that said, I'm excited to share with you the approach that our investment club take when making a purchase of a stock in a scary market. And we feel pretty good about our process. It's pretty simple and it's helped us maneuver through some market crashes. And I'm happy to say for the past 2 years, we've been able to outperform the S&P 500 for 2 years. First thing we do is we want to identify a bullish stock. And the way we do that, we look for a stock where its closing price is above its 50-day moving average. And hopefully that 50-day moving average is actually sloping upward. And when you see something like that, that's a good sign that people think the price will continue to go up. That's step one. Now step two, we're looking for a situation where the 50-day moving average is sloping up and is actually above the 200-day moving average. To illustrate this, let us take a recent stock study I did on Vipshop Holdings Ltd, a Chinese company stock with the symbol VIPS. Now, looking at the stock chart of February 7, 2024, you can see that the stock price is indeed bullish based on my criteria. You can see here the 50-day moving average is moving up and the stock price is above it. In addition, the 50-day and the closing price are above the 200-day moving average. So with that said, we can conclude that VIPS stock is bullish on that day. Now that we've identified a bullish stock, let's talk about setting up our buy and sell levels. And this is how we do it. First, I found a historical low price on the stock chart that I'm willing to make a purchase. Next, I identify a price at which I would like to sell it. So let's go back to VIPS chart. Now, if you notice on this chart, whenever the price goes down to around $14.50, and it can go as low as even $14. But what it tends to do, the price tends to bounce and go right back up. So I consider that level as a good buying price range. On the other hand, you'll look at $19 on the chart, and you'll see back in August 2023 that was a high point. In fact, it peaked at around $19. Now, that is a place where I would consider to be a sell level. Remember, these are just my opinions. So it's important for you to decide what prices you think are best for buying and selling the stock. The next step, you've identified a bullish stock. You identified your buy price level. You identify where you want to sell the stock. Now, before you move right ahead and make a purchase, it's very crucial that you do your research. Trust me, it's worth it. Here are a few tips for researching a company. Stick to a consistent approach when analyzing stocks. Emotional decisions based on news or tips can be risky. When investing, you're investing over the long term. You want your capital to appreciate. You want it to grow in income potential, but that takes time. So avoid spending any of your investment money while you're building your wealth. Let's do a rundown on VIPS.
Analysts expect Vipshop Holdings Limited to post earnings of 74 cents per share. This would mark year-over-year growth of 39.62%. Meanwhile, the Zacks consensus estimate for revenue is projecting net sales of $4.66 billion, up 1.19% from the year-ago period.
You've accomplished 3 major tasks in this approach. 1, you've identified a bullish stock. 2, you've identified your buy price level and your sell price level. And 3, you've done your research and you feel very confident that you want to own the stock. Now, here's the problem. If the stock price is above the 50-day moving average and above the 200-day moving average, it's highly unlikely, and in fact, it's impossible for that stock price to be at your buy level. So what do? Are you saying that, hey, I've done all this research, I've identified my buy and sell level, now I got to sit here and wait until the stock drops all the way down to my buy level? No. You've done your research, you have a company, you want to participate in making money off that company. Here's what you do. There's an alternative approach to buying the stock. And what that is, you're going to sell a put option. Now, a put option is like a special agreement where you offer to buy a stock at a specific price by a specific due date. So an example, let's say that the market price is currently $50. You've done your research and you're saying, hey, my buyer level is $30. So what the option agreement is, say, hey, I'm willing to buy this stock at $30, and let's say my maturity date for this contract is over the next 6 months. So just by you making that type of contract, you sell this agreement to a buyer for a fee up front, and that fee might be $2 per share. So that's money going directly into your account. And if the stock price goes below the specific price before the due date, the buyer may request you to purchase a stock at the agreed upon price. So an example we just said, if the stock was $50, you agreed to buy it at $30, and then something happened in the market for whatever reason, Feds raised rates, we have a war or some bad news. The risk here is that you may end up paying more than the market price. But the benefit is that you get to buy the stock at your desired price minus the fee that was paid to you. Plus, if the stock price never goes down to that level, guess what? You get to keep the fee. You don't have to buy the stock. And in any case, you make a little money. 1, we identify a bullish stock. 2, we identify our buy and sell level. 3, we done our research and we say, hey, we feel comfortable about this company. We want to own this company. And then 4, we sold a put option on this stock. And because of that, we have an obligation to buy the stock. If it went down, we do at our club, we stick to our plan. We bought the stock and we hold it until it reaches a price where we want to sell it. And we understand that the market does fluctuate. So if you look at the S&P 500 over so many years, and a lot of people have done this work already, it shows that the S&P 500 has an upward bias of about 10%. It averages out 10%. You should see an appreciation and stack your coins over time. Now, here's another thing that our club does. We don't load all our money into one company. We're not gamblers. We're not trying to knock it out of the park like we're baseball players. We're like, hey, we're going to diversify across different industries. But by you diversifying, you're getting the benefit of that upward bias. I hope you find this video helpful and informative. If you want to learn more about our investment club, Your Liquid Assets, check out the description below for the contact information. Thank you for watching. And if you enjoyed this video, please consider subscribing to this channel and giving us a thumbs up. Also, feel free to leave a comment below with any investment topics you would like to see or any questions you have. Until next time, happy investing.